Welcome to Trading Lounge and the Bitcoin report for the 26th of May. We'll also look at Ethereum and we'll do that first and then we'll focus on Bitcoin. So with Ethereum here, just going over what we went over yesterday, I can count this down here as a impulse wave to wave 3, 4 and 5, but there's also a way to count it as a corrective pattern as well. So on the hourly chart here, we looked at this yesterday as 1 and 2 here, and 3 to here, and 4 to here, and 5 to here for the A wave, the B wave, and the C wave here. So the only difference between all of them is how we count this little structure within this space here. Apart from that, we can look at this here as wave 1 probably, and wave 2 here now for this. As I haven't counted this up just here, I started counting it, but Bitcoin I've counted up as wave 1, so we could place this in here. What degree of wave 1 still needs to be looked at, but what I want to point out here is that we have a nice set up here. So we've got the first high above the level, the second high above the level, so normally we would be looking at this one, and then we bring it down to this one, and then we bring it down to this one, and we can bring it down to here as well onto that high, but we'll just pop it there and then stop under here for this. So the other point here that I want to make is that we're sitting on a medium level here, 2,500, halfway between two major levels. We're moving into group 2 here, minor group 2. The other point here too is that this move here, I don't need that, this move here is in 3 waves, so that means we'll be taking out the top here. So this is a great trade to take at this point. Okay, that's that, and yeah, the only thing up here is a 61.8% mark that we need to get through here, so we'll need to look at that. So when we get 5 waves here, 1, 2, 3, 4 and 5 coming into here, then that's going to be quite important for our bearish count at that point, so we will need to work through that. Okay, with Bitcoin, we've already got it down as an ABC pattern. So I think that, you know, when markets go into fear mode, they all tune in together. When bull markets are happening, you know, you've got leaders and followers, and, you know, and some are doing this and some are doing that. But in bear markets, they all freak out, everyone freaks out, and everything just tunes into the same thing. So because Bitcoin has made this low here as an A and a B and a C wave here, then Ethereum's just really caught up to it really at this particular point, because Ethereum's bearish move started from here and just came straight down through to here for this. In this case, we can count 5 waves down, and we're using this low here, even though it's not a low on this one. One would call it a truncated 5th wave, but I wouldn't even really call it that, because it's because this 3rd wave really spiked out through here and then came back and collected it. It dropped out of the channel, basically, you know, a news event, whatever. So, but still, I suppose you'd call it a truncated 5th wave. But this whole move down the bottom here completed really nicely for Ethereum. And that's what I've mirrored for Bitcoin, because we've had this A, B and C here, which we knew about all along, and then we've had this 1 and 2 and wave 3 down to here, and 4 and 5 here. So on the tick chart, this counted really nicely, also made a new low below this one here as well. So I just use this here as the confirming price action for Bitcoin as well on that. So this move down through here, we've got 3 waves down here so far. Could it turn into 5 waves? Yeah, possibly. So that would mean that if it was going to turn into, we just need to look at all the options, okay? So if it was going to turn into 5 waves, it would come to the 38.2% retracement level, and then move down at that point and give us 5 waves down. Okay, so it's something that we need to look at. You know, we can't stick our head in the sand. Nice just to look around and look at the other side of the coin. The other side here, as I may have mentioned before, is because wave 4s can get quite complicated. This is very simple at this point in time. Most of the waves have been quite simple. all the way up. So this is probably just fine the way it is, but I think that we need to note that a move up to the 61.8% mark could see us in a flat correction or a triangle pattern. Because it's in three waves here, it will be part of a flat family correction or a triangle pattern, or we can actually just have the low in here. All I'm just trying to say here is that don't get lost in that we can go straight up here. That may be the case. That very well probably is the case, but we don't know that, do we? We don't actually know that. So we have to build a case. And what I'm saying is that this three-wave structure can turn into a flat correction or a triangle or a double zigzag or something or other. So we need to be mindful of that. So it's not really going to affect hodlers or very short-term traders, but position traders it will affect. So be mindful of that, but we'll just we'll go into the fingers crossed analysis, and we'll leave this the way it is here for the moment. Now we also looked at, and this wasn't my findings, this was somebody else's. We looked yesterday, well first of all this is pulled down, it's pulled down to the wave 4 of 1 lesser degree, so it can be a wave 4. Secondly, it's pulled down, if we use the linear scale, it's pulled down past the 38.2%, the 40% as such. So I'd looked at it like this as well here as a wave 1 and 2. I'd need to lift that up 1 degree of structure. So I'm just going to do that now. And it's just something on the side here that we can just look at a bit later. Well, it could become valuable at some point. Whoops a daisy. I've been meaning to fix it, so I'll just fix it now. So that's possible at this point, because it's got all the hallmarks of a wave 2, really, I think. I like it. It's a long shot, but I like it. The other point here is on the weekly chart here, and this was seeing how low wave 4 come. It hasn't overlapped wave 1 here, by the way, so that's cool. It's okay. It's just the fact that it's pulled back really low from this particular wave 2 here. So it's pulled down, past the 50 into the 55% mark there, which is still sort of okay-ish. When we look at this on price settings here, need to go to scale log, then it shows a slightly different picture in that case. So in this case, it would have pulled down, looking at it from this low all the way up here, then we can see that it's probably pulled down 38.2%. Is that justifiable at this degree of structure? Normally, what I've learnt is that you would use log scale at primary degree of structure, which is this little guy here. So, yeah, I don't know, maybe. Either way, all we can do is, we can go into the guessing game about all of this, or somebody could say, confidently that this is right, Pete, and this is wrong, Pete. But still, I need to know why that's right. I need evidence of that. So all I can do is on this, on the tick chart, we narrowed it down. We got the low. Now we've been working off the low, we're working up, we've got positions in, we know the 40 is going to be a bit of a problem, we need to have that as support, that would be the next step. So we just go bit by bit, that's all we can do, one structure at a time. So that's what we're going to do, that's what we always do. So based on that, I'll just go back to the 4-hour chart here for a moment and look at this is sort of where we are here. Look from B to C, looking down here. As I mentioned yesterday, we're looking for support on top of the 4,000. We're looking for a pullback. So we'll go and discuss this now. Where are we? We'll go to the 1-hour chart. I've just been hodling, so where you see with these blue things here, that's where I've put in here. So 1-hour chart. So we got the low, and yesterday we counted up here for 5 waves, and we were looking for a 61.8% retracement level, which we haven't got as yet, and will probably not get, and we'll go into understand that in a moment. We can look at, I've just got it so far as wave 1 here, but I think I'm going to change that to same as ETH here. On the next chart, the tick chart that we got when we're counting all this up here, I had it as the next degree lower for all of that. Okay, that's cool. Let's go to our tick chart, or do we have that on 20 ticks? I can't remember. More. Okay, so yesterday we were counting it up off the low here. So I counted it up as 1 and 2 in here, and then all of this stuff here up for 3, 4 and 5. We were counting it for wave 1 here. So that, at the time, that I wasn't quite sure about that, but that's proved correct now. So we've already got a position here. We can take that over there, and we can have another position here. This is not really a nice, this is not a very nice ABC pattern, by the way, as well. It would have been, I mean, maybe that's the top here. Maybe I'll double check on that. Maybe it's 1 and 2 and 3 and 4 and 5 in here or something. But I'll check on that. But based on Ethereum's count and pattern, so if we look at Ethereum's pattern here, it's really nice, isn't it? An ABC pattern here, then up for 1 and back for 2 here. You know, and this is corrective as well, so that top will be taken out, that top will be taken out. So this is really nice, and the way it's set on the level here as well. So it's really tidy, so we can just mirror image that here. So that would be the corrective move here, and then we can start building to the upside here. That would be wave 1. Don't know if that's going to give it to me. Oh yeah, I got lucky today. And copy that for a little 3 and 4 and so on. But I'll have to take these up another notch. That would be way higher. Just double check this. 1, 2, 1, 2, 3, 1, 2, 3, 5. Yep, that's okay. So 1 and 2 and 3 and 4, maybe to here. Well, it doesn't really matter. It's a bit dodgy, but into here, this 5th wave is a bit dodgy. Then we've got this ABC pattern here. 1 and 2 and little 3rd wave. So we're off and running at that point at 38. So also what we want to do here is we want to also build on top of this level. This has always been our plan here as well, to get support here. I don't know where that will come to at this point, but this is how we will build to the upside. We want that second high. And it's okay here because when we've got a major level, this is a medium level here, but then we've got 1, 2 and 3. So on top of 40, we get a trade if we can get it on top of 40. You never get it right on dead on 40, but it'll always be above it somewhere. And then the same again above 41, the same again above 42. Once 43 becomes the tested support, we get one there as well. So the idea is really to scale in into, because this is all the beginning of the trend, remember. So we want to be building in on all of this. This is the place to do it. Oops, a bit too far. Oops. That doesn't matter. Should be 46,500. This is all a group 2 here. So between 40,000 and 50,000, we've got the minor levels 1, 2 and 3 and 5 and then 8. So the Fibonacci sequence as a price ratio, which really suits very nicely with Elliott wave, because Elliott wave works with the gold mean and the golden ratio. So now we can just square that up with price a bit better. So that's help. The trading levels definitely help Elliott wave. They definitely shore it up a lot. Well, that's it, guys. That's all pretty sort of simple. So the other point really is just looking at, well, can all this move up to this point be the A wave here? So that's something that we need to look at. So if we just go back to, say, the 4-hour chart for a moment, it's pretty small for an A wave. I mean, even we can take the top there and the low here. Now, not the low of the third wave to the bottom, always the fifth wave. So as I mentioned yesterday as well, all these levels are going to, these ratios are going to play out strongly. So the 38.2 is going to play out. It's going to peg the market back into the 40, right? The 50 is going to play out because it's got this consolidation here, and the 61.8% has got this consolidation plus the price. So all of these along the, from this B wave, all of this is going to play havoc there. So just note, use that, and also we can bring it back up. We should always use this one first, and then we can go to this one. But I want to go to this one for the bigger picture here, which brings the 50 and the 60% retracement level back up to the 50,000. So if we were going to get some sort of B wave back up here, let's just say, I'm just being the devil's advocate here, and we need to know if we're going to get 3 waves to this point or we're going to get 5 waves to that point. That's going to help a lot, because if we get 5 waves to the 61.8%, then we know that we're bullish. But if we get a very clear 3 waves to this pattern here, then we need to be really careful at that point, because that's where we can fail at that point. Well, that's it. So we're just going to be aware of this situation here, but otherwise we could, I don't want to get people's hopes up. That's the last thing I want to make people, we want to see people happy, but yeah, the possibility is rational for us to move up and make new highs above the 65,000, and will take us into the 80, be the 72 and the 80, the next levels above. But because we've had this really, to me, is a correction. All of this is really a correction across this number here. This is what this is all about, is the 50 here. This is what this is all about. This whole correction, to me, is all about the 50. And 50, the 5, is the second strongest number in the market. Sure, the 65, the next medium level, tapped it in at the top there, because that would have been the beginning of group 2 in a way. So if that had got support, then we would have gone higher from that point. And then the 30 here is just the next level below here. So this is a correction at the 50. So this will be the balance line for it all as well. It's stretched to the downside, so it will snap back quite, reasonably quick, especially now we've got wave 1 in here and 2 here. So that's going to, that's going to move up nicely to the upside. Alrighty, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.